So for the trade, today being July 17th, we took SPX 4550 calls for July 18th expiration. Just to verbally say this off the jump, our entry point on the 4550 calls for tomorrow expiration, July 18th, was 1.40. As you can see on the highlight and the level I put in on the contract chart here on the bottom right-hand corner. Going off the reasoning as to why we entered, looking back on it now, obviously, when everyone reviews things after the initial entry, after the initial sell, there's always a better place you could have entered and or sold a position. So just going off the 1 minute, I wanted to show you guys this because the candles are easier to verbally see, verbally and visually. Understanding, I was playing off the trend. Lower highs, higher lows were forming. So we were slowly building into a squeeze, whether it be the upside or the downside. On the 1 minute, it's basically a 50-50 possibility. There's no true indication that we are only going to go upside. There's no true indication we're only going to go downside. So taking this out to the 5 minute now, the reasoning behind why I got in calls possibly sooner than most would have, going off the historical levels of a bounce and or a resistance, I was focused on last Friday, which was July 13th. We had a close that tapped out around 45.17 on SPX. Using that level throughout the last week, and the 13th was actually Thursday, my apologies. July 13th was last Thursday. We had a high of the day tap out at 45.17. Going into Friday, we tried to break out above that. We pulled back and we started to zone intraday just under that 45.17 level on SPX. For my personal trading style, I continue to use that zone because why exactly did we tap out last Thursday, being July 13th, at that 45.17 level? So I was using that in the current day price action as a support bounce, as I would say, using these trends of lower highs forming, and I'll highlight these so it's a better visual. We had lower highs forming, and we had higher lows also forming going into quote unquote power hour, 2 p.m. Eastern. I was using these formations on trends to start my position light and basically play off the move. If we held support at 45.17, which was the high tap out last Thursday, I used that as the main support as this trend was squeezing into that level of 45.17. So the reasoning I bought in possibly a little too soon, I bought at the high break. I basically anticipated the breakout. I saw it bounce off the 45.17 and start the trend upside. So I used my personal conviction of if it does sell off slightly, we have a level that has to hold based off trend formation of higher lows. So using that, we pulled back, we bounced. Going off the entry of the contract, we only missed a better fill by about 0.1, which was $10 red that we were in for the position. After entry at 1.4, the contract fill was only down $10 a piece, which is under 10% loss during the hold of the position. Once I saw the 45.17 regain traction, switching back to the 5 minute now, I use the 5 minute as the conviction. So zooming in on that 45.17 level, we had a 5 minute candle close underneath. And basically that next 5 minute candle, I wanted to see push back above 45.17, showing me strength, showing me buying pressure off of the higher lows for trends. When that happened, it gave me conviction to hold the trade and trust the breakout of the higher low going into this trend now. Once we broke out, where this white highlight is moving on the screen, we held heavy consolidation above the break of that trend. So the lower highs forming, break above. Now on any pullback, we have to hold that trend, which aligns with the previous lower high in the trend formation. And I'll make this highlight red so it's more visually appealing. As we held this red highlight, that's when I started to sell into the push. Using Friday's high and Friday's intraday tap out from this trend of lower highs, this is why I was selling into this position. I was focused on this highlight area right here, being a key level at 45.22, 45.23. Using this breakout, as we pushed above 45.22, I used the push, the IV, send, whatever you want to call it, people chasing the contract to get out. The ask on the tape was fluctuating heavily, even though price action was not moving as quick upside. So I used to my advantage a quick sell into a push to get a quick higher sell than I should have gotten, because once we sold off, the contract being in this area where the white highlight is was cheaper than it was back here with consolidation. Since the price was moving so quick, the contract we were in had that intrinsic value increase on the premium value. So selling into strength, that's what I use to my advantage when I play these type of positions. Going off the contract on this side now, the first sell that we had was at 2.00, which was in this push right here. The initial push, I tried to get out at 2, and that was back here where I have the highlight moving. We tried to get out at 2.00 here for a trim. That was my first personal trim, and that did not work out. There was not enough push on the IV, so we pulled back. I was not shaken out of the play because, we were at 1.95. We pulled back to 1.55. I'm not scared because going off SPX, this red highlight that I'm moving, we held historical resistance off the lower high trend now as support. I'm holding because of the chart, not because, the contract's about to come back to my entry price. I got to get out to secure profit. I'm only focused on this trend line has to hold. This white trend I'm moving. If we pull back, we have to hold this support to bounce off this. That next run up we had, that's when I was slowly selling into the volume, into the push, because the contract was gaining traction, even though it may not have deserved to be that expensive. I sold into the push. The first sell we had was at the exact time frame of Eastern time, 2:22 Eastern, which was at $2 a contract. Entry was 1.4, first trim was at 2.0. As the price pushed up higher, the remaining contracts for my personal position were sold at 2.20 about 2 minutes later on this push. After the sells hit, we came back down, and just like the red highlight was showing earlier, we still held that support. So anyone that still had runners going off the chart formation, this support still held and showed its strength, meaning you can still hold this position. I took my gains. I was pleased with it. I was happy. Anyone that held runners, obviously, as you guys can see from the chart, price skyrocketed. A huge breakout level I was talking about was around 45.25. Going back to the 5-minute, that was going based off last week, Friday, heavy consolidation break on the upside. Price came in, SPX basically squeezed to the upside to 45.32. The contracts we were in ended up hitting a high of $410 a piece, 4.10. And then as you can see, the heavy sell-off, the current bounce, once again, notice how the chart price action is always consistent. The bounce end of the day was right at the same triple bottom of support we needed earlier in the day. Using that, price action always reoccurs. As resistance breaks on the upside and pulls back, it's going to hold support, giving you indication to buy calls and trust the move based off price action on the chart of the stock you're playing. Going towards the end of the day, the contract is currently, it closed around 1.1 a piece, even though we sold around the same area for around 200 a piece. Understanding how time decay comes into play for contracts is huge. That's why I always sell into heavy buying pressure for calls, take advantage of the IV push, and that is why we sold entry. For a quick recap, 1.4 we entered, we sold majority at 2.0, final position was covered at 2.2. We finished the day from my personal position of making around $750. The risk on this was only $300 with a stop loss being 1.1 for the sell on this position.